Hello, my name is Tyler Porter, online sales advisor at Shane Homes, and today we're here to talk with Kent from Mortgage Tree.
Excellent. We're going to walk through and look at what a pre-approval looks like when you're buying a new home.
So what does a pre-approval do for you?
The pre-approval, it is a tool that homeowners use to be able to understand what their budget is. It uncovers any red flags. It really creates a good understanding of your affordability for the max mortgage you can qualify, and also looks at what is comfortable to be able to live happily in your home.
So if I'm going to buy a home, when should I look for a pre-approval process?
You should be looking at a pre-approval right away to be able to understand your affordability before you go in and start negotiating on your purchase price. Understanding your budget leads to better results and sets expectations with your home purchase.
So what does a pre-approval guarantee me?
It guarantees you to know what your budget is.
So I have a pre-approval, I'm looking at a house. How long will that pre-approval last?
Pre-approval will last between 90 and 120 days, depending on the lender. And during that process, we will look at your credit, we'll review your income, and give you a very strong indication as to what you can afford. Once you have an offer in, that is when we submit for a formal approval, where the lender will look at you, but also the property, and be able to come up with a formal commitment to the client.
So which documents are required for a pre-approval?
Typically, we ask the clients for ID. We will get an employment letter or pay stub. If they're self-employed, there's further documentation around your T1 generals, notice of assessments, financial statements. We recognize people's incomes are unique to their employer, so depending on the way you're paid will dictate what we need. The other important part is your down payment. Where's that coming from? And making sure that we're able to understand that for the proper documentation that the lender is going to request at some point during the build.
So which parts of a financial picture matter the most when getting a pre-approval?
Income is one of the most important aspects of qualifying for a mortgage. The lenders also look at your credit history. They look at your down payment. Where's it coming from? Is it from your own savings? Is it a gift? Is it in Canada, your down payment, or is it outside? These are all important things to understand up front when we're doing the pre-approval process.
How long does the pre-approval process take?
Typically, when we get the application and documentation, we'll have an answer back within 24 to 48 hours. Files that are more complex, it can take up to 72 hours. Those are the typical timelines.
So I've got my pre-approval, I'm ready to build. What are some do's and don'ts of the new build process with a mortgage?
Let's start with the good news. The do's: maintain your job, save your down payment that you're working towards, maintain your credit. Things that we typically see where people run into troubles is they change jobs and they no longer qualify. They go from a salaried position to something with more variable pay. Other people make missed payments on their credit because all the lenders will repull credit right before closing. So make sure you keep your debts up to date. And one of the most common one that we see is people getting car loans. Cars break down, people want that new, better car. That will impact your qualification. So Tyler, for your new build, don't get a car unless you talk to us first.
Okay.
When you talk to us, if it's a change of job, buying a car, or any other debt obligations that you're taking on, we're going to be able to re-review the situation, go back to the lender, and get a firm approval. We're not saying you can't change your job, but we have to be able to stage it and make sure that we maintain the approval that the lender has given us so you can close on your house.
All right, let's dive into debt load. What would happen if I'm looking at getting a new car, my car's getting old, but I'm building a new home, or my credit card's getting a little bit high on limit?
That's a very common situation we deal with clients. First of all, when you realize that you're going to change your monthly debt obligations and they're going to increase, the best thing to do is to reach out to us and we'll re-review the mortgage approval. We'll look at your income to debt ratios to make sure they still conform. Because when you go and get that car, we're going to have to factor that payment and readjust the approval. A lot of clients are not aware that that extra step has to be taken, but it is something that is pertinent when you look at your mortgage and during your build process.
So how does a mortgage process vary for a new build versus a resale home?
There is a big difference. Typically with a resale, you're going to close your home within 120 days. That's just typical. But with the build can run from 8 months to 12 months. And during that build process, there are upgrades that might happen in terms of when you meet with the builder to go through and go, hey, I want to upgrade the flooring, add this to the kitchen. Many changes that will affect the purchase price and could affect how much money you need to borrow for your mortgage to make your dreams come true.
So if the total home price changes, what do I do?
What you do is you reach out to us. We will be able to get a statement of adjustment from the builder and be able to have a discussion. Do you want this to be financed or do you want to pay cash for it? And we'll go and update the lender with what the total purchase amount is and come up with a new approval for you. And this is very easy to do, and the timeline to do it usually takes the lender 3 to 4 days to come back with that update.
If interest rates change during the build process, what happens to me?
What happens with rates, they're unpredictable. They can go up, they can go down, and they change daily depending on what the Bank of Canada is looking at and also the bond rate. So with consumers or clients, we'll look at a 12-month rate hold that locks in a rate, and typically it's a little bit higher than what current rates are, but you know that you're protected in the event that rates go up. You're not going to have a rate higher than what the approval is. It also, 120 days before closing, the same lender will look at what their best rate is in the market and offer that to you. So it's a double win with that type of an approval. Other approvals are where clients will have a 120-day rate hold and they'll roll that over into the next 120 days up until their closing. With all lenders, as you approach closing, they will look at what their best rates are, and typically it's within 120 days. They'll offer you what is their best rate.
So which upfront costs should buyers be aware of when buying a new home?
When you're buying a home, you've got your initial deposit that you're going to give the builder once you have the purchase contract confirmed. And then the next cost will come in when you're getting closer to closing, and that will be around your down payment. So that is the remaining money that you owe, and that'll be paid to the lawyer. You also have to factor in during the build, what upgrades are you doing? Are you going to pay for them cash, or are you going to finance some of them within the mortgage? And the key thing there is if you're going to finance it within the mortgage, you have to let us know so we go back to the lender to get your approval updated. And the last part is your legal costs. And that's something that you should have a discussion with the lawyer that's representing you, because they'll give you a quote as to what to expect for closing. And they'll also confirm the remaining down payment.
How should buyers plan for deposits, closing costs, or any other potential costs?
They need to be able to keep their money in a stable and traceable account. Let's face it, lenders love lots of paperwork, and they want to make sure that they can show the paper trail of where the money's coming from. So things you don't want to do, keep money in a mattress and right before your closing, decide to pull it out. You need, during the pre-approval process, go through deeper dive into the details of where the money's coming from. It can come from savings, it can come from a gift from a family member, it could come from a RSP, and there's rules within RSPs that they have to be in there for a period of time for it to qualify to pull out. And these are important things to have a discussion with us to ensure that there's no hidden surprises and everything runs smooth for you.
What happens if someone's not approved for the amount they were hoping for?
There's a real risk because you really don't know what you can afford or if there's any roadblocks that are preventing you from getting your house. You think of all the time and energy you spent to search out the house you'd like and the plans and the upgrades, only to find out that there's some work that needs to be done before you can sign that purchase contract. We have to look at why that is. Sometimes it's just as simple as readjusting debt, adjusting down payment, bringing on a co-signer, looking at how your income is being treated by that particular lender we're discussing your pre-approval with, because different lenders have different guidelines that, yes, you can be approved through a different lender. These are all important options that need to be explored at the pre-approval process to make sure that there's no unnecessarily red flags that come up that hold you back from meeting your budget. And if we're not able to get what you need, is just having to reset your expectations and what you can afford. And that's why the most important thing is getting pre-approved.
So what steps should I take if I want to strengthen my file before getting a pre-approval?
One of the first steps is you should look at your credit score, whether it's through Equifax or TransUnion. You can set up an account for free and be able to review your credit. that is probably the most important thing, because you have to have good credit in order to get a pre-qualification.
I've been on Shane Homes Build and Price. I know roughly what my house might cost me. How can I find out what my monthly payment might be?
Mortgage Tree and Shane Homes have a shared app. Within the app, there's a tool where you can look at what your numbers might be for a pre-approval. It's as simple as looking at what your purchase price is, your down payment, how much you earn in your debt load, and you put in your credit score. It does a formula that comes out and goes, this is what you can afford for your house. Once you do that, you can start to budget, and the next step is to get a formal pre-approval where we dive deeper into your financial details.
Are there programs or incentives that first-time homebuyers should be aware of?
Yes, there are. There are the RSP withdrawal, where you have to have your money in your RSP for at least 90 days, and then you can withdraw it tax-free, and you have to pay back a certain portion each year over a period of time. So that's the first one. The other one is a home buyer's account, where you put the money in and you take it out and you get a credit. And the third one, a lot of people that aren't aware of, is that when you're doing your income tax as a home buyer, first-time home buyer, you can apply for a tax credit on your income tax.
So I heard about this GST rebate. What's going on with that?
Well, the government came out and made an announcement that they're going to look at a GST rebate for new homes. And nothing has moved forward with that as of yet. If and when it does, what will typically happen is the builder will update you, the purchaser, as to what the amendments to the purchase contract means and how much that is. The next step is we take it off to the lender, and the lender will update their approval. But at this time, it is not in place. It is just something that the government has proposed, and we're waiting to hear what next steps will be.
With all the lenders available, why should homebuyers choose Mortgage Tree versus all the banks or other lenders out there?
It comes down to experience. We have over 30 years of experience in the industry. We know all the lenders. We know their guidelines. We know what happens during a build process to ensure it's simple and smooth every time. We don't have hidden surprises. We are very clear and upfront to ensure the transparency through the whole transaction is simple and easy so you can enjoy your new home.